Hey guys, it's Will. Hopefully, you're all having a great day today. So, we are live. We're doing a Sunday stock talk. So, we're going to be jumping in to some of the top stocks. We'll definitely be going over between 5 to 10 stocks, if not more, real quick. But comment the ticker symbols you'd like us to take a look at here. We're going to go into some top AI companies. And friendly reminder, if you haven't already, we have a custom profit plan that is tailored to you via some of the top stocks that I hold, top cryptocurrencies I hold, and everything else. If you want to grab the custom profit plan, it's free, and you'll get an email with some of the top stocks that would match your strategy. Not necessarily, financial recommendations, but definitely something that would be tailored to how I have my portfolio set up. And you can claim that free profit plan in the third link below. Thought I'd mention it because it's an AI setup. We're kind of testing it out, and it gives you a breakdown of some of the stocks. So, how's everyone doing this Sunday, getting ready for this week? Again, comment your top ticker symbols. I got a smoothie here. I'm drinking a smoothie. Strawberry and strawberry and bananas. Okay, so AI stocks. We got robotic stocks. We got space tech stocks. That's a really cold smoothie. And we have defense companies. When the market opens tomorrow, we're going to have a lot more clarity around some of the movement. Now, we know top companies in the AI markets were green to end out Friday big time. But if you've been wondering, like, oh, I don't know about this week, very volatile, maybe you've lost some money recently, maybe you've seen the markets go down and then your portfolio has been volatile and you're trying to figure it out. And you also have a lot of things going on as we just kind of started this year, and you're getting things up to speed. Just realize that the ability for you to grow your portfolio is very possible, and if anything, it's going to be more likely for you to be able to grow your portfolio in today's day and age than any other day and age that has ever existed. So to build value, when the market opens again this week, we're going to watch really closely. We want to see what's going on as we jump in. And Lintaway Duct Cleaning says, "Did you watch the Super Bowl?" Drew James says, "Sorry, Super Bowl. People are watching the Super Bowl. Other than, I watched the Super Bowl. I was playing some golf simulator with my dad, and we were also having the game going. I wasn't that into it because I like the Chargers. That's my team. That's where I grew up. My dad is a really big fan, and I used to play football when I was younger. I played all the way through D1 in California, which is really fun. And I also played a lot of sports, but I love football. Yeah, I wasn't too interested. I'd rather get everybody ready. The Super Bowl commercials might be the best, right? Yeah, that's honestly one of my favorite parts about the Super Bowl. Um, okay, so let's jump into it and let's check out the top ticker symbols. Lintaway Ducting has got some tickers. The first one we got here from Biggie is TSSI. Okay, so I'm going to jump right into it. So if you look at all of the markets, and you're just starting to get a grasp of what's going on, one of the top markets that is driving AI is going to be the data center market. We know that some of the stocks dipped huge this last week, right? When they dipped, one of the reasons why, not the main reason, but one of the reasons definitely, was that they were increasing capex, meaning capital expenditure, more spending on AI, and people saw that as not good for top AI companies because that means they won't probably have very good profit margins in the near term. However, what does that mean? While big companies might be spending more, there's smaller companies that will most likely benefit from that increased in spending strategy and approach from the top companies. So big dogs spend more, smaller dogs end up making more money in a market like that. And that's what we see right now. So I'm going to cover one of them. I see it's Biggie is saying TSSI. So TSSI is a stock that's in that method of small data center companies that has pulled back significantly from around $31 a share down here to about $8 a share. And one of the things that's really cool about this stock and why I like this stock is because they're building the data center infrastructure, and they've pulled back big time. So they're right around $9 a share. They still have some margins to offer. I hold this company long term, just disclosure. But I'm looking at this company here for a 40% increase up to around $12 to $15, if not seeing them get back up into that $20 range, which would be a 150% increase. Now you do see some downward pressure, but if you're going to look at this company kind of as if there's one thing, when the market has had dips like we've seen the last week, and why we would focus on TSSI, and I love that Biggie's bringing it up, and why I like the company, is because they're one of the smaller enablers for the big tech. So we'll get into the financials in a second, but before we do, or let's get into the financials first, just so you know the integrity of the company. So they were up super volatile, but they were up about 16% last Friday, last trading day. Their market cap is low, so they're going to be really volatile. They're at just $261 million in market cap. So not tiny, but big enough to start gaining momentum, start gaining up to the potentially up to that $1 billion level, but small enough that you would want to have some caution when approaching this stock TSSI. The income statements is what I like. If you look kind of annually, you see that they've really increased their revenue by over 170%. So they've gotten their revenue up from 30 million in revenue a year to over 150 million in 2024. And then in 2025, they're on track to do, they got one more earnings report, but they are on track to raise or to do over 250 million. And so they're increasing their revenues big time. And then their total assets are up to $165 million. And their liabilities are down around 102. So why is that good? It means that if there was one company that you would want to look at, it's going to be the enablers of the big tech. So this company is starting to see a lot of influxes in their capital. And they did just come in with a few quarters recently where they had a positive net income. And so if we look at what they do is they configure the data centers. So they got modular edge services. So that includes the liquid cooling solutions for the data centers. That's going to be a big one. AI builds, so just general enterprise in building MDCs to keep pace with AI's evolving computational needs. That's a pretty big mouthful. But essentially what they do is they make it possible for top AI companies to be able to build their data centers. So it is a huge demand. How many of you guys are using ChatGPT right now? How many of you guys have heard of more people using AI in their day-to-day? Right, ticker symbols, I see them, awesome. Biggie, how are you doing? Sure, James, you got Super Bowl commercials is what you're watching up. I love that. All right, hymns, you got some other SoFi. Okay, love the progress on the screening AI. Yeah, I'm glad it's going well. Randall, how are you doing? Randall says, will this prophecy access ETFs? Some ETFs. Let's get into that actually. So when I'm looking at TSSI, like how many of you guys are using AIs? Just realize there's a huge demand for the AI computations right now. And so if I'm going to search up this stock TSSI from Biggie, once again, financials look good. The market that they're in is growing pretty quickly. They have seen some pretty volatile swings, and they're down from $31. They're down here around $9 a share. The potential next level that if they do turn more bullish here, and they started to break out here on Friday, we saw them actually jump out from this trend. They were in a downward trend here. They broke out above this level and started to make some runs. If they were to make their way, like they might even see some corrections at market open right now. After hours, they are up. But if we were to see them make some bullish momentum plays, they are looking at 40% gain. Like that's the nearest kind of level. There is a level here around $10 they might have to break up above, and that's at 15% gain. But if we were to see them get up to, once again, that $12 to $15 a share, we're looking at 40% to 50%, or even if they get up to where they were earlier this last year, we're looking at 150% potential gain on this one. So I really like this one. Now here's what I want to jump into. I want to jump into that. So this is one I'm holding long term, and we're watching the nearest levels at $9 to see if they hold. So that's where they're at. On Prophecy AI, I was just looking at some of the projections on Prophecy. We did have some bearish signals here. You kind of see a big overextension in the near term. If you look on the RSI and you look on the MACD here, you can just see it recently surged and it's looking overbought right now. But if near term corrections are there, which they are, maybe in the longer term, we're looking more bullish up into that $10 to $15 range. Really like that for TSSI. So we're going to watch there, and we're going to keep a close eye on TSSI. Now, again, I'm really excited to jump into this one. So the other one I really would like to touch on, and you see it in the thumbnail, is going to be CTM. All right, so CTM is in a position where they've gotten more focus from outside investors. This is new. All right, we haven't seen them get as much focus from outside investors. Okay, but they've had some news that is really interesting. So I want everybody to hear from me. Let's hold into the news here. We'll lean in a little bit here. They're a micro cap defense technology company. They've had a lot of activity in 2026. They've had some contract wins that put their backlog to over $160 million, but they're very volatile. Their contracts might be up there, but their current market cap is under 100 million. So they are 80 million or so or less market cap, but they have about 160 million in contracts with positive net income, no liabilities being greater than their assets. They have plenty of cushion there. They're in a good financial position. But one of the things to watch, and this is kind of what we've been hearing, is there insider trading? Are they going to be able to pull out more contracts? They're such a low value. Are they going to be able to make it above to some of these targets that are out there around $3 a share to $4 a share are some of these targets? And just from looking at AI overviews, let's say you got 49 million contract wins in 2026, 49 million. That's for Navy. Missile defense contracts, they got some missile defense contracts. But here's the thing, the financials are what I think are going to pull this stock into the near term up to that $2 range. Now they may or may not make it. They may not make it out of where they're at, but I have some long-term positions, and I'm looking at the income statements, and I'm saying, look at this consistent revenue, 15 million a quarter. They're not only having positive net income in the last quarter, 415K, they actually had a positive net income, but they also had assets increasing. Now the issue, and this is what most people would say, okay, well, I'm just going to take a step back, and look, I've been there too. I don't trade penny stocks. And when I first started trading this, it was over $1. And then our long-term positions, we entered at 87 cents about a year ago, and it's still flat. It's, down 14% over the last year, but it's got some volatility here. And right now it's down about 1% year to date, but it's pretty flat over the last year. Now, we have had some runs up to about $150 a share, and it's currently at 89. And we also see that they have continued to build their contracts, 49 million in 2026, and then over 150 million. They had a 66 million there. They had another $100 million contract earlier in 2025. And so if you were to look at their almost really over $200 million in contracts that they've signed, if you were to look at that and say, okay, Well, they're signing these defense contracts and they're really small. No one's talking about them. There's not really any hype. I don't see any articles about them. No one's talking about them, and their financials don't look bad. So what gives? Why aren't they a $300 million company? Why are they at $83 million market cap? One thing to consider is just the timing here is that we haven't fully seen those 150 million, $200 million show up drastically on the revenue. Everything about the stock has been very gradual. Revenue slightly increasing, net income slowly getting better. You could see their total assets jumping 60%. You could see them slowly, the blue columns rising, while the liabilities slowly going down, going down, meaning they have less and less debt. But it hasn't been like one quarter where they come out with some crazy results or there's been one big contract. It's more like this slow, steady, non-hype. Really, they're a penny stock. They're 83 million. And what I like about them, if you were to look at some of the insider trading and things like that that's going on, is their institutional ownership is pretty minimal, right? They've got Vanguard there with 207K, or they got about $1 million in the company. BlackRock holds about $1 million. But let's see, State Street owns 250K, but you don't have BlackRock owning 50 million or something like that. It's actually not fully owned by too many institutions, which is what we'd like. Some of the projections on this stock seem to be fairly good, at least when I'm looking at Grok, especially into, this isn't the right one, hold on, CTM. Because I know CTM does have some BlackRock holdings. Okay, so there you go. BlackRock only holds 127K of this company. Vanguard owns 1 million shares, just about. So what gives? Why are they still trading under $1? If you look at some of the projections, once again, we do see them getting up above $1, getting them potentially into $1.15, and maybe even into $1.50 or more. And so CTM stock, I continue to hold them. They take a lot of time to develop, but they're in the agentic AI. They're in the AI markets, in the defense markets. They're small. They don't have a lot of hype. They aren't super flashy with their marketing or anything like that. So I'm going to continue to hold them and I'm going to continue to, cover them. But once again, you see the downward pressure. They've been flat over the last year, really flat. They haven't even moved really. They're kind of at a low, back to where they were back in 2025 at this time last year. And so just to watch and say, okay, when the move presents itself, if you're looking for adding on a short-term trade, what we want to catch is something like that, a reversal. Maybe see it get up into that $90 to $1 range, can potentially add to a position. We already hold about, I don't know, 3 to 5,000 probably of CTM shares. And I would expect, once again, if we see this swing, it's about a 50% swing. We'd look for something like that. Why do we continue to follow it? The values just making sense. They've got more value, more contracts than their current market cap, and it just makes sense to follow them closely. So that's why I continue to hold them. And also, doesn't take much when they're at 80 million. You could sell down, for sure, but you still have, institutions haven't touched this thing. If you start to see anything real serious come in where they have a really good contract flow, like they've really had okay contract flow, if they have a great deal come in, one more, they might spike to, $300 to $500 million. And so I'm okay with the patience on that one. I just continue to hold that CTM stock, Corey. So hopefully that makes sense for you, man. Appreciate you. Thanks for tuning in here. Next one. So we got, next stock we got here is Rich Tech Robotics. Rich Tech Robotics. So we're going to go over to robotics over here. Okay. Let me write this down real quick. I see some ticker symbols and I want to get to them. Let me write this down. Okay. All right. And there we go. Okay. So Rich Tech Robotics. This company has gone from around 30 cents to as high as $7 and then recently sold down to about $3. We're anticipating that they might jump to maybe $4 or $5 a share. They did, and then they continued to sell back down, which we also would expect, they're holding above the 200-day moving average. So if you take a look at the green line here, so oftentimes when a company is maintaining their upward momentum, you're going to see them hold above this 200-day moving average on the longer term time frame. So we do see that here. And let me pull them up in Prophecy as well. Richtech Robotics here. Okay, we'll get things going. You do see BlackRock owning about 4 million shares. Vanguard owns about 1.7, or they sold a good amount recently. Actually, they sold about 1.5 of their 1.7. Bank of America is owning some. BlackRock, yeah, they've actually increased their positions here into the year. From an insider perspective, you do see some sells. CEO has been selling. COO has been selling. It looks like overall, though, you got more buys than sells. According to Grok, when it's looking through all the institutional buying, selling, insider stuff like that, there's been 18 buys versus 2 sells on the insiders. Okay. When it comes to Richtech Robotics, they're facing a support test at 325, according to Grok, inside of our platform Prophecy AI. When we give it all of the data here, and we give it all of the real-time analysis that it otherwise can't access, some of this market data, 325 support, it says. So let's take a look. Where is that? Yeah. Okay. So once again, 325 support makes a lot of sense. You can see it's down there to that 200-day moving average here. That's going to be 325 right here. You can see where it's pulled down to recently. And so as it's had runs up to $7 a share, $7.50, it's also pulled down drastically here. You can see it's still maintaining some of this upward momentum, but down to this 200-day moving average. So currently at that 325 mark here, looks like there is a support here, and this is where they're going to potentially find support. And we're going to touch on financials real quick as well, because they might, while it looks like they bounce and they continue to bounce here around this 250, you do have some financials that should be looked at. So you got this support level though. They bounced there on Friday. So nearest support level to really watch would probably be around that $25 price point. And the nearest resistance, or I guess you could say bullish target here, they're kind of out of resistance around 3 right here, 350. But if we're looking at resistance up here, something like this, okay, maybe you get a spike there, but potential margin for profit here with, again, downside pressure. You see this sell-off here. There's no indication just yet. It's even looking a little overbought after that recent push up on Friday where it might sell down to that, 250 or below. But it's still, kind of looking for this swing up to about 40% gain to $4.50, $5 a share on Richtech Robotics. When the market moves like it has the last week, there's some macro factors, but let's take a look at the individual financials of this company real quick. So the financials on Richtech Robotics are at $760 million market cap. If you look at their current revenues, they've been increasing for the most part, but they also have had negative net income. When they have negative net income, it means they're really losing money every quarter. And so the balance sheet has increased. They've raised up to $272 million, but $272 million in raised balance sheet. The only thing that's good about that is that they don't have much in liabilities. That's the only thing that's good, because $272 million and they're losing money each quarter, about $3 million. Is it favorable for a company like theirs if they're already trading at 200, or they're trading at 760 million? They're trading at a premium right now. They're losing money. They haven't turned a premium. So why are they getting momentum? Why are the assets increasing? What are investors seeing that are making this one go up? It's got to be the robotics. The robotics here is AI-driven robotics to solve real-world challenges. You can see that they have some new technologies they're working on. This looks like it's working on a electric, what is that? Okay, it's mixing drinks. I saw these at CES actually. It's mixing drinks over here. but it's also working on like a technological like board of some sort. So hold on, let me go grab something real quick. Okay, so this right here is something I've been working on. And this is the robotics market. And so this company, while they're serving up coffees, things like this, it actually looks pretty helpful. Do you guys see that? That thing right there that's zoomed in, look at that. See that right there? So imagine that I have this thing right here. Do you guys see this? Looks pretty cool. See this piece of technology right here in my hands? So this right here is something that we're developing that allows users to do a couple things. Number one, it has a fingerprint scanner right here. It's got some haptics and some, it has a battery for charging and portability, and it also has a camera and also has a microphone. And it's an AI device that is going to allow all of our Prophecy users to sign in and use an AI device to get analysis of things using the best AI models in the world. And so we just started developing it. And so if they have something like this that I was just seeing with this AI-driven robotics, and they're working on something like that, that's pretty insane because these things are not easy to work on. So if the robots are working on these types of things, it's going to be pretty cool. Looking forward to sending out those thumbprints to all of our Prophecy users, by the way. But here's the deal. They got a lot of robotics. That's why they're hyped up. They definitely get a lot of hype. The financials haven't caught up. The financials don't look that good. They're losing money quarter over quarter. In fact, more money. However, they have a good balance sheet. They're growing, and they might be good in the next year or two if they continue to slowly ramp that revenue. So that's really what we'd watch. On Rich Tech Robotics, if you look into the next few months, it looks pretty negative. Looks negative into most time frames, but still projecting for them to stabilize and hold above $4 a share into the next year, at least according to Prophecy AI. Now, it might be worth it as well just to take a look at the support and resistance, see where it's at. So once again, that $3.30 support just below where they're currently at would be key for Rich Tech Robotics. So once again, just watching that $3 support, watch carefully if you're on a short-term trade, and long-term, they continue to hold above that 200-day moving average. So that's really just it for Rich Tech. When the market opens, we'll see how it holds above that 320. Okay, what else do we have? Will, did you see that AI chart? That you see it going higher? Will, chart or stock are you talking about? We're talking about Rich Tech Robotics. Okay, so anyway, I'm not gonna be too bullish on Rich Tech. I wouldn't. I would have a lot of risk management on a stock like Rich Tech because they're still a startup and they haven't turned good revenues yet. Okay, next stock that we saw was, let's see, we got Redwire, we got AMD, we have NVTS. That's definitely been in the conversation. APLD, we've talked a lot about APLD as well. We did go into CTM stock here. IREN, Justin's looking at IREN. Serve Robotics is what Big E is looking at. Serve. Okay. Oh yes, who wouldn't want a $10 beer from a robot? Yeah. Okay, so when it comes down to some of the top ticker symbols, let's take a look at AMD stock here. So AMD stock, and just a friendly reminder, if you guys want, there's a lot of stocks we went over. You got robotic stocks, you got the data center companies, we have the AI companies, the quantum companies. If you'd like a piece of kind of all of them and get a customized profit plan, it's totally free to grab, and we put it in the third link in the description. All that I ask is that you share with me some of the details about what you're investing in, what you're watching, what your goals are as well, so that I can really tailor the plan to you. And it will be fully AI generated with some of the knowledge that I've given the AI. Okay, AMD stock. Here we are, AMD. So we don't have any short-term trades going on AMD, guys. Everything going on in AMD is short-term and or is long-term, excuse me. But we do see long-term looking great. The short-term is in trouble right now with AMD. So AMD stock, oh my gosh, I've never seen so many drawings. Let me delete all these drawings. There we go. Okay, so the overall support level and resistance, you are seeing some interesting kind of levels to watch here on AMD. We've seen them trend from around $20 a share over the last 5 years or so, getting up into as high as 150. We saw them absolutely get decimated and destroyed throughout 2024, all the way until 2025 in April at $76 a share before they finally found support and continued up into $260 a share. So here's where we're looking at AMD. Now AMD had a sharp pullback recently. They pulled back here. You kind of see the trend. It even is resemblance of an overall uptrend as we've seen them get rejected here. And potentially this is going to be the 200-day moving average bounce, and we see them continue this trend that they're in and getting back up, holding above this 194, holding and continuing back up to 250 plus. So that would be the bull case for AMD. They signed more data center deals. They're working with Starlink. They're one of the top companies. If you were to search Starlink and AMD stock, you would see that some of the top videos that are suggested are actually from our channel, even dating back as far as 2024, because we saw this move happen about, when AMD was at $75 a share. They, even just before that, and they continue to sell down while they doubled their revenue. And they're one of my top holdings in my portfolio, actually, as AMD's technology supports AI advancements and the growing demand for tech, as SpaceX and Starlink are run on AMD chips. And so when it comes to why we cover them, why we think it was good, and we've been pointing this out for over a year now, is that the revenues were set to increase because of AMD's Versal chip. All right, and this was the original article. Most people talk about the data centers. Most people talk about the GPUs and how they're a competitor with NVIDIA. But what I like is that the top space and tech companies are choosing AMD over NVIDIA, and that they're in the space tech market. If you look at some of their revenues, you could see some of their embedded segment. They've had their revenues really increase, and from quarter over quarter growth, they doubled their revenue. They also were seeing their 5G networks and things like ASTS, which is another space tech company. Have you guys seen ASTS? So ASTS is a company that's doing the 5G technology. It looks something like this. They have these 5G kind of satellite networks. They get launched, and they're partnered with Verizon and AT&T and Google, and they are sending the 5G from space down to Earth for companies to get total coverage. Pretty interesting stuff. But the thing about it is, while we look at this and you look on the surface and you see the partnerships, again, AMD is one of the top companies. So AMD has pulled down to this 190. Let's take a look at some of the projections in the near term from Prophecy, and let me go ahead and just select Gemini for this. Let's get Gemini running. I'd like to see what Gemini has to say about AMD here. So nearest support level, according to Gemini, is going to be at that $200 range, with nearest resistance level around 214. So if we're going to be looking at AMD here, let's see, is there any new crazy articles? They dropped about 17% recently, big dip. But we saw influx in capital towards the markets that they are in. They had a little bit of a supply chain strain facing server CPU supply shortages and delivery delays in China, potentially impacting revenue. But overall, they expanded partnerships with OpenAI and Taiwan Semiconductor, which indicates that they are a strategically placed AI infrastructure company. So their revenue guidance has definitely shifted. You see, once again, that $200 support level. So currently, as we're sitting here on Sunday, they're at $211. So they're above that $200 range right now. We did just recently add some real-time data. I don't know if you guys could see, but we got some of the after hours pricing inside of Prophecy app, which is super cool. And I don't know if you guys are seeing, but I'm actually getting the AI summaries of all the latest articles. That's also been a really fun one. But nevertheless, what you're looking at, some of the near term even looking bullish. Do see some downtrends potentially at market open tomorrow. That's kind of expected, but we'll see how they react at market open when the market opens. But why AMD could hold $200 here and continue this overall uptrend? Just AI demand, right? AI demand is huge. They're one of the top companies. They're starting to be recognized as an NVIDIA competitor, so we may see them get up into 280. But what most investors don't realize about that potential, 30 to 40% upside is there have been times where AMD has continually sold down. And I see Michael here. Michael says, well, have you seen the news that risk much higher to the downside? And is that for Rich Tech is being sued? Yeah, I'm not surprised. I've said that there is some issues with what they do. One of the notable things I didn't like that I think they since removed, and I did a whole video on this, was they had an article that said that they were partnered with NVIDIA. And when I went and dug into it, it was an article that was fake. Or it was like something that I could personally go do in about 5 seconds. And I did it on a live stream, and I showed how it wasn't actually accredited the way that people thought. And so that was something that we proved. And we do that all the time with some companies that are overhyped. We do that all the time. But AMD, I don't believe is overhyped. While they have a high valuation, if you were to look at their financials, you might say, okay, they trade at a premium because their market cap's at $330 billion. But they're making $10 billion per quarter. The revenue's growing 30% year over year, average 30% year over year. They have a positive net income over 1.5 billion. Their total assets are now over 75 billion, and their liabilities have even decreased from the last quarter from 16 billion down to 13.9. So they have really good financials. It's just they're trading at a premium PE. That's what's going on. Excuse me. They're trading at a PE ratio of 79. So I like the company. I continue to hold AMD long-term. We have long-term positions. But if you were to take a risky trade right now, even though they're at a support level, even though we see this overall trend where they're kind of uptrending here, and you can kind of see this very consistent uptrend on AMD where they've pulled down recently, they are at this support level around $200. Something to realize, $200 support level to watch. They're at 211. So if they did pull down further, I would manage it closely if you're in a short-term trade. Long-term doesn't matter too much, but the short-term, you got to watch that $200 level and look for that potential recovery. Next stock we got here is going to be, let's take a look here. Let's do SERV. This is going to be Serve Robotics. Serve Robotics is in the robotics market, which we know is growing really fast. Their stock has been on an uptrend as well potential recoveries or continuations would put them at around $20 a share, 100% increase from here. The reason I would be very wary of this one and just take, I don't have any short-term trades going with Serve Robotics right now, is because while their technology is very cool, I don't know if you guys have been to the city, see these technology driven companies that are, they are like partnered with NVIDIA, and you can get your food delivered. The waiter puts the food in the thing and he closes the thing, and then he gives the robot the instruction, or the robot already knows, takes the food over to the lady at the place, and then the lady opens it up and says, oh, there's my food, let me go get my food. And DoorDash is partnered with them, Uber is partnered with them, and that's really just it. Now, while they look super exciting and I love the technology, I've actually seen them quite frequently in the city. If you were to look at their financials, they're just a little shaky. They're very exciting, kind of a sexy type of company where you're like, wow, that's really cool. But when you look at their market cap, 795 million, increasingly negative net income. See this orange just getting wider and wider. Negative net income increasing. They lost about 33 million last quarter. While they're growing in assets to 299 million and their liabilities are low, they're still right now ramping up. They're in startup mode. If they were to pull net income positive, it's quite possible you see this company become multi-billion-dollar company. But with a negative, increasingly negative net income in startup mode, they are seeing a lot of volatility. They might even sell down. They're trying to hold above the 200-day moving average currently. We'll see how they do. It's possible they do, and then they continue up to that $22 range, which would be a 90% increase. But just watching that level, say, okay, are they going to hold that level? Let's take a moment, see if they really can hold above $10 a share, as it's been a real struggle for them in the past. Sometimes they just slide on by that $10 level. So institutions like them, I'm sure, but they haven't seen the value just yet with that company. But I like them on our list. That's why we cover them. Okay, next one. So Serve Robotics, once again, when we see a little more confirmation on Serve, if they were to bounce here, change direction, break above this EMA and the 200-day moving average, probably break above $11 a share, we may buy Serve because of that breakout potential move there, and seeing the larger trend playing out. Okay, how we'd enter, we'd also want to look at reassess the risk there a little bit more. But that's really it. It's been volatile, and you guys know that if you're seeing the market. Next one, we got Redwire. Let's get into Redwire stock. RDW. Okay, so RDW is Redwire, and they are one of the top companies that has been building space tech. They have defense contracts, and if you look at their chart right now, they are in a volatile moment. They've had runs up to $26 a share and as low as $4 a share. We saw them get down to $4 back in November, December, and we did see them recover back up to about $14 a share. When we were looking at Prophecy AI and we got some of the projections, we saw a $11 to $15 range, and they did end up hitting that $16 price point. They got above 10. And so recently, if we were to look at the pattern, it looks a little bit crazy here. But if you were to look here, they had a very consistent trend from $6 or $5 up to 15. Okay, then they started to correct down. In this correction, they have been possibly breaking out. And so the nearest support level to watch is actually right there around 950. So they broke back up above. And the next resistance to watch is going to be right here. This previous support level here. This support level here. Support here. Support, $10.50. That's where they're watching here. So in the short term, I would watch above this EMA, this blue line. Okay, so we'd want to see them hold above $10 a share. That's what you would want to see for Redwire. And break out, if they continue to break out, would be above this 1075. And that's how the short term looks. Now we can validate it as well. Let's see. Prophecy AI, according to Gemini Ultra, is indicating the nearest support level is at $10. Isn't that what we just said? That is what we just said. $10 a share. Nearest resistance is going to be at 11.22, it says. So where is 11.22? Oh, okay. So I was a little bit conservative. 11.22. That's my birthday. Right there. I guess I can't hit 11.22. It's going to be right here at this potential swing of about 7%. Okay, 7% potential swing on Redwire. Still kind of not a lot of margin. They're between these levels now. And so this doesn't look the prettiest, I could tell, because of the volatility in the market, to where it's like, all right, what if they don't hold 10? Now we're looking very bearish down to 8. There's secondary support levels, but watching the $10 support and then that $11.22 resistance is key. Now, if we see them break out, I would believe we're going to see them get up into this $12 to $15 range. Let's see what the AI has to say about that. Yeah, so according to Ultra, we're actually targeting up to $14 to $15 a share. And watching some of these levels, again, a $10 support, but looking for a move into 2026 here for us to, mid 2026 to get up into about $12 to $15 a share. Now, if you were to look at this company and say, okay, real quick, do they have any other catalysts? Technicals look good. They do. Yes, they do. Revenue was over 100 million last quarter. They signed a $151 billion deal recently. That's a Golden Dome contract. They jumped 29% after the fact. That was a huge deal for them. I met this company. I met them at a conference. They're a really good company. They have really great partnerships. They just got in on this deal that's also AeroVironment, Palantir, Anduril, Lockheed Martin, Blue Origin is also a part of that deal, and they got a part of it as well in that $151 billion. They also are a key contractor in a $2.7 billion deal. And look, you hear me talking in the billions of dollars, but their market cap's only at $1.6 billion. So if you were to look at their market cap, $1.6 billion, that's pretty small. They already have $1.45 billion on their asset balance sheet. So they're still looking like they could break out further. And so once again, that's why we'd say, hey, maybe we see them get back up in that $15 range in the medium term if they can get through some of this initial market volatility and hold above $10 a share. But we've also seen them even higher than $15. We've seen them as high as $26. I'm not going to say that's where we're going to get to, but just to see where the true value could hang, it is between this $10 to $15 range. And right now they're on the low side, around $10 a share. So that's why we'll watch them here into the next week as well. What else do we got? So we got Redwire. We got time for one more. Justin says, I got to go make a sandwich. Thank you, Will. I appreciate you. Man, let's go, man. Enjoy your sandwich. I'm not going to keep you from enjoying your sandwich, man. Can't you eat a sandwich and still hang out here? It's like a whole thing. You got to go, you got to like turn everything off. Maybe it's loud or something when you're making your sandwich. I get it. Okay. You're like spreading your peanut butter and jelly and you're listening to me say like, and here's the support level and here's the resistance. And then you like go grab the peanut butter out of the cabinet and you just hear like, don't pump and dump. Don't follow pump and dump stocks. You want companies, if you're in the short term, that you'd want to hold long term already. That way you don't get bag holding on stocks. You're just like, okay, man, just trying to make my sandwich. All right, we got a few more. So I see a few more ticker symbols. I haven't looked at this stock in a long time. Sale. It is called GRRR because they had manipulation in the past. So this may be brief, but I'm willing to take a look at it. GRRR, Gorilla Technology Group. How has the last month been? 10% down, 6 months, 30%. How's the last year? 44%. Ooh. 5 years, 88%. Ooh. All right. I'll be real with you. This stock had manipulation. I saw it about 2 years ago, and I didn't want to show it to anyone. So once again, just urging caution as I pull this stock up. GorillaTechnology.com. They are working on smart cities in, I believe, Singapore and some other places. They are focused on building AIs that help cities become more smart, you could say. And they have things for police officers, for security, for monitoring the environment and policing. Okay, railways, road solutions, port solutions, healthcare, airport solutions. And I'll tell you why, I don't want to go into all these things. I think it's really cool. I could definitely show you guys like what they have as marketing. But if you notice a lot of fancy icons and you see a lot of AI generated images, like kind of like fake images. And look, I should probably meet the company. I understand it. I understand what they're doing to an extent. Like if I go to prophecyapp.com, this is our company and we use it in our videos, viewing the future of any stock with Gemini Ultra, Super Grok Heavy. I like to put the new features that we're adding into the homepage before we've added them because it's so exciting. Like some of the things, how about monitoring all the ports and having the AI tell you what's going on in the different places, or the AI is monitoring all the space tech companies up there and looking at all the orbit companies and telling you which satellites, which companies are monetizing and have the satellites up there like that. It's not fully out yet, but like I create it and I show it on the page because I'm like, this is where we're going. And I actually believe we'll be there in the next like 2 months or so in this endeavor that we have with Prophecy AI. And so I respect the company showing all of their solutions, but at some point you have like 50 solutions: building, policing, railways, road, port, airport, healthcare, safe schools, retail solutions, parking solutions. Like you have so many solutions that it's like, are they actually turning a profit on all of these things? And then when you look at the financials, you could look at it and you'd say, okay, 26 million in revenue. That's not bad. 26 million in revenue. They lost 28 million though. No, 28K. Okay, so they were just about even. Revenue increased a little bit. Okay. Balance sheet, 266 million. Okay, so they got about 200 million in equity, 198 million in equity. Okay. Market cap is at 266. Okay. They need to build a little trust here. Because if we look at the company and look, let's take a look at GRRR. I'm going to x-ray this company real quick. And I'm going to pull it up with Prophecy AI, and I'm going to get the view of the insider trading and the top transactors, and I want to see. Oh, okay. That's rare. Let's go to NASDAQ. Let's do it. GRRR view, institutional holdings, increased positions 36. Okay, so you don't see BlackRock really doing much. You see a little bit of State Street. The insider activity is not available. Why are we not finding that data? In my experience, I've seen this company have a lot of negative manipulation. And so I'm not going to touch it right now, but I will come back to it. I know that hopefully that doesn't just, hopefully that's helpful for you. But there's been so much manipulation on the stock that I remember seeing some of this manipulation up to $44 a share. And I just thought, I don't want to touch this stock. I didn't make money. I didn't lose money. But I know a lot of people lost money. And so I just don't want to even bring it forward anymore. So I'm hopefully you guys aren't disappointed that I don't keep covering this one. Okay. All right, BBAI, CLSK, that was going to be the last one, but that one's super disappointing. Not that you did anything wrong, Mr. Gentleman that brought forward that stock. I appreciate you, man. Thank you. I'm not trying to come off as unappreciative. I respect your hustle. I would just be careful with that one. Okay. Michael says, funny, I just pulled up GRRR on my notes. I also have manipulation pump / dump on the chart. Looks like momentum and money flow are negative. Just pause and wait on it for now. Yeah, I would just wait on it. Yeah, Sally says manipulated as much as BBAI. BBAI, I wouldn't say, like, BBAI is volatile, but BBAI has held. I know that it looks like it hasn't, but if you were to look at the volatility every time it's spiked, it's also still up like 100% year over year from where we were, right? And like just back in 2024, even though it's still held because there is some value creation. I think that BigBear.ai might be one of the top trades that we follow. And look, I could be wrong and then they don't execute. But if they execute in the way that they're looking to execute with their defense contracts and everything else, they're going to crush. They're going to crush. But they have to execute. You're right. They aren't there right now. ONDS, can you check out AMCI? Okay. Let's take a step back here. Evan wants to take a look at TRX Gold. I see CLSK. And we went through. I have gone through 7 full analysis at this point. We got time for one more here. We could do one more, or I could do 3 surface level. Let's do 3 surface level. All right, first CLSK. Okay, CLSK. Okay, let me pull this up on Prophecy as well. Something's going on with that one. CleanSpark. Okay, here we are. CleanSpark's got some levels to watch around $10 a share. BlackRock has been investing some, so they definitely got some recent institutional interest. Their financials, they're at $2.5 billion market cap. They make $181 million a quarter with sometimes negative net income. This last quarter, big negative net income of 378. They got $3 billion in assets, which indicates that they are fairly priced, even a little bit undervalued potentially. Have they sold down? They have. They were at around $23 a share. They're currently at $10 a share. Market cap, okay, PE ratio is 9. That's very low, fairly rare. They're down near a support level where they've been in the past. CLSK, let's take a look. Oh, last time we did analysis, we were anticipating they were going to go up. Hold on. CLSK. There we go. Okay. What do we got? We got this drop, big dip from last week. Is that sufficient? Pull this down a little bit. Okay. Yeah, CLSK has had a lot of volatility, but they are a company that specializes in, I think it is data center related. Optimizing power intelligently. They work out of Texas, adapting power, and they have had some manipulation, no doubt about it. They are Bitcoin miner transition company on data centers. Okay, they have some data center outlooks, their recent press releases here indicate that they delivered 181 million in revenue. That was good. Multi-gigawatt AI infrastructure, that's growing. They got their AI and their HPC development. Okay, financials look fine. All right, so near support level looks to be right here around this level of, what is that, $8 to $9 a share. Yeah, you have the rising support, which they may hold currently around 850. They're currently around 10. So they are turning bullish. You got some levels here to watch. This range between $8 and $10. Institutions would at least recognize that as a support. In the instance we got some bullish momentum in the data center market, they may do quite well. They have some downward pressure, but they could target up to about $15 a share, which would be about a 50% potential increase. Now, they're selling down and they haven't quite recovered yet, I don't think. Let's see. Hold on. Yeah, they have recovered from 7. Recovering. That's the nearest resistance. 10, 10. Yeah, their nearest support level, according to Prophecy AI, is at $10 with a secondary support at $9.24. That's on the short term. Yeah, that makes sense. So I would watch support, see if they hold above this $9 range here, $9, $9.25. If they do, that's great. They might be targeting up in a recovery, this V-shaped pattern that we do oftentimes see. If you were to go back, you'd see a lot of times where you get these V-shaped patterns. V-shaped patterns, you see these big sell-offs and big recoveries. You've had a extended sell-off where they've started to recover, 40% potential swing. I like the company, actually. I think they're in the right market, but I don't really think that their financials are insane. They had a big negative net income last quarter. So they're worth watching because they're in the right market at the right time. So let's watch that 925 support into tomorrow morning at market open. See if a stock opportunity presents itself or anything. Have it on the data center list, I believe. Yeah, there it is. Okay. All right, next one real quick. Overview. Let's take a look. We got the BBAI for Roger. Okay, BBAI. Okay, so BBAI is pulled down and they dropped as low as 375 before recovering now. And you can see some of these levels. So currently they broke pattern down below 7 and had that previous support level not hold for them around 550, which they were trying to sustain all the way through October. They consistently held above it and then dropped below all the way down to 375 and up to 4. So if you look at this support level here, it's a little rocky. They now became more in the no man's land. They dropped below the 200-day moving average, which indicates bearish outlook. The company also had some news working against it. Homeland Security shutting down in the government was definitely not good for any defense stocks. When they dipped down, Palantir dipped down just as much, actually more. And they're recently recovering from 375. We might see a V-shaped pattern with them as well, but they have some downward pressure. So their nearest support level is going to be around $4 a share, and they're going to be looking to get up still up to that 550 to 650 once again. Now, if they are able to hold above 5, that's where they're going for, about a 10 to 20 to 30% increase up to 650. But there is still about 10 to 15% downside here if they can't hold above about $4 a share. 450 is their nearest support level, it seems. So I would be a little bit cautious on Big Bear AI for any short-term trades. I don't have any short-term trades running on Big Bear, but it looks like, yeah, their nearest support, 459, resistance around 480. So after that, though, they're breaking above to $6 if they can continue. So that's the level here. It's like, okay, if we see them get up here, they might face a little previous support as a resistance around 550, but really they're going for 650 if they get up above here. Now, if they try and make that 650 run, it's about a 40% increase from here. So they do have that upside potential. And then the longer term time frames, I would imagine we're targeting up to that $7 to $8 range. But once again, not to get ahead of ourselves, as they have had downward pressure. The entry, when we look for an entry, would be them holding above 450, continuing some of this breakout out of this downtrend, and then potentially rocketing to 6. It's about a 20 to 30% increase. Why do we follow them? One thing to know about AI is the market's growing really fast. Big Bear AI has the World Cup coming up, and they have some other large scale projects that they've recently gotten into. One of their biggest advantages is their CEO, who is previously the commissioner of U.S. Customs and Border Protection, U.S. Department of Homeland Security. That's one thing, but you got to see that move into new contracts. We've seen it move into more infrastructure as they've deployed these various scan technologies into major airports like Denver, LAX, Chicago, Dallas, JFK, and there's having millions of people go through and they're scanning their face. I've seen it firsthand, so I know it exists, but they haven't seen new contracts as a result. Because they haven't seen new contracts come in from Homeland Security or the Army, or a lot of their contracts are in the Department of Defense, that they haven't been able to see it translate into revenue. So their revenue has been flat, in fact, slightly decreasing, which isn't what you like to see for an AI company. You'd like to see an AI company be growing in revenues at this time, because it's the number one time for anyone to grow as an AI company. So if they're seeing flat revenues as an AI company, it's not that something's wrong, but it could be that either we need to have a little more patience with the stock, or their execution just isn't going through. They have to execute. It's like they have all this technology out there. Why is it not turning into real revenue yet? There's a bigger play. They haven't been very transparent on their earnings calls. At least I'd like to hear a Q&A, which they haven't done. So that's why we see them start to have some difficulties. That being said, they've raised a ton of cash. So they have plenty of runway. They had a positive net income last quarter, and they're growing in their total assets. So it means that they're going to see a lot of growth ahead if they execute. Again, they have all this cash that they're going to be investing into more infrastructure. Are they going to continue to develop? They got partnerships with Redwire and Palantir. So let's see if they can, pull through. Otherwise, you got 450 support. They're trying to hold. After that, doesn't look pretty. Maybe down to $4. Or if they can break out into this week, we might look to trade them. See them get up to 650, something like that. That would be beautiful. Then we start talking about them holding that $5 to $7 range. It's really where they were back at last year. And let's see if we can get them back up into that $7 to $9 range. That's really just it for Big Bear. Okay, so a lot of good insights from you all. You got Fanuc from Michael. The ticker is Fanuc. Yeah, I know that one. Yeah, they have a lot of robotics and they're in the factory automation. Yeah, exactly. Yep, CLSK, according to Yahoo Finance, sales growth negative 16%. Yep, yeah, they had, I think you might be looking quarter over quarter. Yeah, year over year, they were looking green though. All right, Michael Anthony says, think you should buy companies with profits that have low PE, like PAGS, that had 2 different upgrades to $13 last week to $14 that pay a dividend and have business in Brazil. Thank you. Appreciate the opinion. Rich says, does Big Bear AI get recurring revenue from the airport installations? That's unclear. That is unclear. Evan, at least on the earnings call, I didn't see anything. Evan says, TRX Gold. Evan, I see your message. You've been here, man. Appreciate you. I'm going to go through it. Last one here, TRX Gold. TRX Gold. Let's see what's going on with this one, Evan. Ooh, Evan, what you got me into, man? It's pump a dump? I don't know, Evan. It's up to 280, man. It's pulled back down. Let's take a look here. TRX gold stock. Let's try it in Prophecy as well. All right, so I don't have anything from you from a technical perspective. Slight breakout potential. You got them holding below a 200-day moving average. You might have something like this, selling back down after a market cycle, which would be a pump and dump. But let's take a look. $400 million market cap, very small company, high risk. However, their revenue is up to 25 million last quarter. Pretty steadily growing. Balance sheet looks fine. Total assets up to 129 million. Total liabilities at 55. Their liabilities have jumped 60% over the last year. So they are narrowing their equity a little bit. But they're holding about 74 million in equity. Let's see, 100 million a year. 70 million in equity. That's like 170 market cap, 450. At one point, they were very overextended. Let's see if they signed any recent contracts. To me, it looks a little manipulated, but let's see. Yeah, okay. Yeah, it looks to me like they've been manipulated there, man. I just wouldn't touch them. They're trading at a premium right now. I know gold has done so well, so they might have seen that advantage from gold spiking a couple of months ago here. But selling down, you have the potential for them to surge. But this is a penny stock, and it's kind of a pump and dump based on the financials. And I haven't seen any real news. So I would probably stay away, Evan. But nevertheless, man, I actually really think you're onto something looking at gold. I've been looking at copper, looking at silver, looking at some of the minerals. Really good stuff. I think you want to find them, but you also don't want them to be hyped. You could sell. You can already see that they're hyped. You also have an AI article here that says that they're pretty high risk investment. I would agree. I would agree with that. So I would be a little bit careful there. So hopefully that's helpful for you. Yeah, Michael says, you must buy companies that are making profits with good fundamentals by the news on Bloomberg TV. Yeah, I like it, man. All right, guys. Hey, appreciate you all. Thanks so much for tuning in. I hope you have a great day. We went through a good rest of your night. It's cold here, getting ready for the weekend. Just want to go through the top 10. We went through, a lot of different stocks, a lot of different ticker symbols. If you would like to tune on into our daily live trading sessions in StockMate, we're there live at market open. We'll be there tomorrow morning at 6:30 a.m. Pacific Standard Time, or right when the market opens, whenever that is for you. If you'd like to see my entries and my exits, well, we went over a lot of the win here. What we're going to be looking at tomorrow morning. We still don't have full direction in the data center or AI markets, but I'll tell you why you want to pay attention. A lot of volatility right now, and also a lot of really good moves that are happening. And if you want to learn how to trade these stocks and get into the room, we have our daily live trading. You could see my entries, see my exits. We got the targets for the week, the earnings we're watching. We got over 30 millionaires inside of StockMate. And you can always send me a message as well. But you get access to it all, including our live sessions in the second link below to tune on in. The other thing is Prophecy AI is closing tonight. So there's about 4 or 5 more hours, but about 4 hours, when it closes, you won't have access to go get this AI. So if you want to go learn how to get access, you can find that in the first link below, and that will take you in. When you get Prophecy AI, which includes, all the AI models, Gemini, Ultra, Claude, OpenAI, Grok, plugged in with the same analysis I use to do my analysis every single day, the full system, the market, the technicals, the fundamentals. You could search any stock you want, build your watch list, use AI, visualize the markets, the different companies in each individual market, which is really exciting. All that good stuff. If you want to get it, you can get it in the first link below in that latest and best free class there for the machine. If you want to get institutional grade analysis, that's the place. And you get StockMate for free as a bonus when you tune on in. So if you'd like to go grab it, have a look at the first link below. I appreciate you all. I hope you have a great day. Thanks so much, Michael and Randall. Thank you, Time, Mina. Thank you, El Coco Loco. Appreciate you, man. Hey, we'll be at work. Love the live market opens when I can. Thanks for the live sessions in the evenings. You bet. We'll miss you. Thanks. See you guys in the next video. Bye for now.